What is up, guys? Welcome back to another episode of Papa Trades Daily. I'm going to be talking about two things today, mainly the RSI, which is what I went over briefly yesterday, relative strength index. Want to just let you guys know how convenient and useful it can be. Most times, not all the times, it's not a perfect indicator. We'll go over the little small details. And of course, I want to go over the SPY. Remember the SPY being an ETF trust that follows the S&P 500. Now, I did mention yesterday, jumping straight into it, this is where we're looking right here. Remember, down here you see the daily. We are looking at the daily. This is where you make your selections. I hope you guys have already downloaded Webull. You're ready to start, trading, starting to get some action in there. Just a quick reminder, if you do want to get some free stock, send me your email via comment or message, and I will send you a link so you can download Webull and receive some free stock. All you got to do is invest or pretty much transfer $100 into the account, and from there Webull will send you your free stock. Could be worth anywhere between $5 to $3,000, so that's some free money right there. Getting back to the video, I am looking right here at the SPY. Yesterday we talked about this. Again, we're looking at the daily candles, so you can see it down here. And what happened today? Today, as I predicted yesterday, we did drop. We did get rejected from that support that we touched yesterday. I'll go ahead and switch over to the 4-hour chart so you can see it better. This being yesterday right here, this is where we closed out. I did say that I would not go long on this position. I would actually go short and get some puts. As you can see today, the following day, we did drop around 0.44%. That being a good little gain for the put options. If anybody did follow that video from yesterday, anybody got puts at the end of the day or early this morning, let's look at how the market acted today. Looks like we opened up right here. We pretty much traded sideways all day, some of that choppy action. Choppy action will happen during times of unpredictableness. When the market is a little bit unpredictable, you'll see a lot of chop, a lot of trading sideways is what you call it. What is happening is that the CPI report is dropping tomorrow morning. CPI report being the Consumer Price Index. Consumer Price Index, let me break that over to you guys, is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. What does that mean? Consumer Price Index will give us an idea more or less on how inflation is performing. Are we doing a good job at lowering prices for a basic, basic basket of consumer goods? Your average eggs, milk, egg, all that good stuff. This is able to let us know if the practices that the Fed has been putting, which I talked about yesterday, the increasing of rates to slow down the economy. This will let us know tomorrow if it is in fact working and if things are getting cheaper for the average consumer. We should expect to see some volatility tomorrow. Hopefully the market should decide, and if things look good in that CPI report, we could potentially see a breakthrough of this line, which we marked yesterday, being the 417, as you can see on that high. Let's see. Let me go ahead and make this a little neater for us. We're not talking about the RSI yet. This is the MACD. MACD, I'll be talking about it in tomorrow's video. So you can see right here. So it looks like we did just trade sideways. We went down overnight. This would have paid off if you got puts yesterday, not necessarily today morning. Keep in mind that when it comes to options trading, there is what is called theta. Theta works against you if a stock that you are holding options for is trading sideways. If you are holding an option and there is only sideways price action, your investment will be decreasing in value even if the stock is holding the same price. Why is that? It is because stocks option trading has an expiration date. The closer you get to that expiration date, the less your option is worth. The best thing that can happen is for things to go in your direction instantly and hopefully hit your strike price. If it does at any point start trading sideways, your option will decrease in value. Keep that in mind. Now, let's see. It got rejected, going down. Consumer price index. So if things look good tomorrow, you should expect, as you can see, if we zoom in, I just went ahead and went into the 4-hour chart. If you look a basic understanding of the market, you want to just go ahead and find some support. Are we at support yet? Now, as you can see, there seems to be some sort of psychological support right at 410. Right now, it looks like we closed at 410.93. So we do have some support at 410 slightly. It is a psychological support. If that does hold tomorrow and we see a good bounce, we will be coming up to retest that 417. If you were doing option trading at the short term, I would actually go perhaps long here and try to get that bounce off of 410, ride it all the way up to 415 perhaps. Personally though, I will not be doing any trading on this. I would prefer to see some confirmation. Again, I am doing a lot of risk management, and things look pretty risky right now. As you can see, we got rejected right here. It's coming down over here. Okay. Yeah, I would personally prefer to see it come up and hit that 417, and right here I would load up on more puts. If you do load up on more puts here, then your gamble is for it to ride it all the way down. Of course, if it does go up, then you will be taking your risk up until perhaps 420, being a psychological factor. That was where you would cut your losses. So we'll keep watching this tomorrow, of course. Let's see. And that should be about it. Now, if we are going to be using the RSI, which is all the way down here, let's go ahead and move this up. Here we go. So our RSI, let me make this fit. There we go. Okay, this is a trend line that we drew out yesterday. If you look at it right here again, keep in mind it went straight through here. Looks like it's gone under. If it does go over that, there's going to be a really good rally. Your RSI, right? The RSI is a relative strength index. Relative strength index meaning it is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. It will basically tries to indicate whether something is oversold or overbought. If it is oversold, you're going to see it all the way at the bottom, and that means that it's getting ready to turn around. Buyers will step in and push that price up. If it is overbought, you will see the RSI all the way at the top, and I'll show you over here. You will see it right around this corner, right on this line, and this is where it's going to start turning around. Again, as you can see, there is times where it continues to push even further past the line, which the line is around 70 points on this side. You could see it if I move myself. There we go. You'll be able to see it right here. So if it does pass over that 70, you should expect for it to turn around. Again, keep in mind, for example, right here, let's see, we're looking back at March 31st. The RSI was already maxed out at 70. It continued to push up all the way to 410, I believe, 412. So at this point, as you can see, it is a smart choice when it surpasses that to just wait on it a little bit. And as soon as you see a sort of a drop, that's when you want to load up on puts, or vice versa. If you see the RSI dropping dramatically, such as right here, and you have it all the way under 30, here it's hitting all the way to 23. So you can see we had plenty of red days right here. Looks like that's March 10th. And that is when you want to load up on some calls. Again, this is not 100% sure, but it is something to consider when doing your options. And what you want to do is you want to play it smart, play it safe, Once you do grab some sort of call options, is sit on your hands, wait patiently. As soon as you see some price action in your favor, you always want to set a profit target before you actually do the purchase, before you actually invest in something. Say if it reaches a certain amount, I will exit. And the most important thing is to actually listen to yourself. If you have set a goal of 10%, 20%, 30%, and that goal is hit, sell, close it out, and that is a good trade. A good trade is when you listen to yourself, listen to your plan, you stick to it, you go through with it. That is a good trade. A good trade is not necessarily making money. A good trade is either exiting a position when your risk has been hit or selling a position when your profit target has been hit. So let's try to keep that in mind. It is crucially important that you follow this because, as you can see, especially in today's market, it is extremely volatile. Things are turning around very fast, and you don't want to be caught up in being in profit. Things turn around, and you end up losing your profit. Plus, on top of that, you lose some of your initial investment because you got greedy. Do not get greedy. So here, as I was saying, going back to today, it looks a little, it's a little choppy. It's nothing for sure. The consumer price index could push this to either side. It's sort of like floating in the middle. Now, if it does lose that 410, it could come to a little dip. Let's see, to around like 4.9-ish and turn around. However, if it does drop below 4.8, that would be a good time to enter and write it down all the way to perhaps 4.05. So keep that in mind. Those are some good entry points. Always wait for a safe trade. You're not missing out on anything, and there's always the next trade coming up. So out of personal experience, be patient, be patient, be patient. That is what makes a good trader. Be patient and listen to yourself. I hope this gave you a better understanding on how the RSI works. Keep in mind the RSI does change accordingly to whatever time frame we're using. If you go all the way down to the 5-minute within the day, you also want to catch it somewhere at the bottom. That would be the best way to go about it. The 1 minute, I don't really use the 1 minute because it's take it with a grain of salt. I mean, yes, it can be good if you're an extreme scalper. However, we cannot be doing scalping here because keep in mind that if you have under $25,000 in your account, the SEC does regulate you to doing only 3-day trades every 5 business days. That means that if you day trade today, you will only be able to day trade 2 more times within the next 5 business days. That is why we are trying here to do some swing trading. You want to grab an option, hold on to it for a couple of days. Hopefully it goes in your direction and you sell, or vice versa. If it goes in the negative direction, then it hits your risk target, then you want to try selling it the next day to try to save those day trades unless your risk is hit within the same day. Again, if you do exceed those 3 limits, you will be penalized and you will receive a warning. If you do it again, your account will be blocked and you will not be able to day trade anymore, or a swing trade, or any trade whatsoever. So with all that said, guys, I hope this does help. Again, yesterday's advice seemed to have worked. Hopefully today's advice will work for tomorrow. And without further to say, guys, well, hope you guys enjoyed this episode. Please hit that like button, subscribe to the channel if you're not already subscribed, and I hope to catch you guys on the good one. Guys, actually with one of my favorite quotes by Warren Buffett: buy when others are fearful, sell when others are greedy. Keep that in mind, let it process. Catch you guys tomorrow in the next episode of Papa Trades Daily.